How do our most senior leaders feel about the direction and trajectory of our industry? What's their outlook on the future state of wholesaling, and, based on their considerable experiences, what lessons would they help us all learn? That's what we want to find out in this special series of episodes we're calling Lessons from Leaders. Welcome to the only podcast on the planet dedicated to exploring the art, science, and lifestyle of wholesalers and their leaders. This is the new Wholesaler Masterminds radio show. I'm your host, the founder of Wholesaler Masterminds, Rob Shore. This episode of Lessons from Leaders is sponsored by the Money Management Institute and their Center for Distribution Excellence. MMI is the industry association that connects all participants, including asset managers, platform sponsors, and technology providers in the always changing and rapidly growing advisory solutions world. The new Center for Distribution Excellence, built by and for financial industry sales professionals, is dedicated to discovering, promoting, and improving best practices in the wholesaling community. In Industry First, the Center brings together a comprehensive suite of events, networking opportunities, and educational resources, all designed to help sales professionals interact with their counterparts from across the industry and learn from the best of the best. For more information about the Center for Distribution Excellence, call MMI at 646-868-8500. That's 646-868-8500, or visit MMINST.org. Wholesalers, welcome back to the new Wholesaler Masterminds radio show. This is our Lessons from Leaders series, which we hope you're enjoying. If you haven't checked out the prior 3 or 4 that we've done, please do go back and listen to them, because we've got some powerful guests, and today's show is no exception. Jeff Carlin, CFA, is with us today. Jeff is Senior Managing Director and Head of U.S. Retail Distribution at Nuveen. He's responsible for leading the placement, distribution, and support of all products through the retail distribution channel. Prior to that, Jeff held roles as the head of distribution for structured products and national sales manager for the Wirehouse and private wealth channels at Nuveen. And before joining Nuveen, he was national sales manager for IndexIQ, general manager, national sales manager of managed accounts at Schwab, and he also did some time as regional director, Northern California, for Smith Barney's consulting group. Joining us today from San Francisco, assisted by Carl the Fog, Jeff Carlin. Welcome to the new Wholesaler Masterminds radio show.
Thanks, Rob, and thank you for having me. Looking forward to a great discussion.
I appreciate that. We thank you for being here. Nuveen is an eminently successful and very large organization, so we're very, very excited about getting your take about our 6 questions. Let's just launch into the first one. Are you bullish or bearish on wholesaling?
I'm bullish. I think the industry is definitely changing and changing pretty dramatically and pretty rapidly. And the wholesaling, I think, is really one area that is poised for even more importance on a go-forward basis. And I think about that from the standpoint of, advisors are telling us a couple things. One, they're telling us that their businesses are getting more and more complex by the day. Asset management companies, businesses, Nuveen's included, are getting more and more complicated by the day. And they're really looking for and wanting to have deep, dynamic relationships with sophisticated people on the other side of the equation, advisors are. And so because of that, I think talented wholesalers, advisor consultants, advisor specialists, whatever the nomenclature at the various different firms are out there, those that are talented, those that are able to, carry very broad and wide-ranging conversations that are approachable and can build relationships in a wide variety of individuals, and also can act in an advisory capacity, are going to be very much in demand. The doors will always be open for those individuals, and I think the wholesalers of the future will be the ones that can master all those skills adeptly and most importantly, I think, and this is probably one of the things that will be changing more and more, will do so in more of a team orientation that will allow them to bring the best of what they need to bring to support the advisors they work with. So I'm very, very bullish on wholesaling.
Let me ask you a question as my next guest after a discussion that I had not just the other day. I was talking to a coaching client, a management coaching client, and they were lamenting the future of wholesaling. They were perhaps you could argue spending time in a bubble of negativity because they themselves were looking for some changes career-wise. But they found themselves getting the undertow of negativity was starting to get them, because I heard them talking about, well, wholesalers that I've known for years are going and having to change industries because when they go looking for a job, there's 10 and 15 candidates for every job, and even though they're highly qualified, I mean, how do we address that? I mean, you're one of the most senior leaders in the business. How do we address or bifurcate the general optimism that we hear on this podcast? Because as you might imagine, every single senior leader I talk to is bullish on wholesaling, as they should be, in my humble opinion. But how do we address or further bifurcate some of the naysayers, some of the folks that are dragged down by some negativity because they are witnessing jobs being harder to get, jobs being harder to retain? How would you address that? It wasn't on the syllabus, but how would you address it?
Yeah, no, well, first off, I absolutely get it. I understand, because there's pressures at every angle, right? The revenues that have traditionally come from the space are under duress. You read about every day firms, reducing the top line management fees in their funds. You also hear about how the firms that we work with, the sponsor firms, the broker dealers, their margins are under pressure, so they're trying to get a bigger portion of the economic dollar, and it's coming from asset management companies. You're hearing about the flight to passive and the fact that active management can't add value any longer, which, as we all know, those things, like everything, are pendulums that swing from one way to the other. So all those issues out there are real, and they're true. And there's a lot of people who are expecting that when we ever do get to a recession, if this bull market finally runs out of steam and we get to a recession, that there'll be the opportunity to extract firms from having distribution talent will be presented, and you'll see a lot more people put on the street. So there's all that's out there. But I guess the other flip side of this is, the way I see it anyways, is that the numbers of advisors that you focus on are getting smaller. I mean, no matter how you look at it, the team orientation is taking what used to be a number of individual buyers out there and individual advisors, and are pushing them together into bigger, bolder groups. So it's making the selling process be longer. It's making the ability to get in front of those advisors take more time. And then once you get in front of them, they're scrutinizing even more so now than they ever have in the past, because their time is precious. And if you're in front of them and you don't add value, they're not going to let you back in the second time. So you've just now eliminated a spot. So I think wholesaling at its core is extremely bullish proposition. The talented folks that are in that space are going to have jobs like job opportunities and security like they've never had before, and they'll be paid very, very well for it. The issue, I think, that's kind of underlying a lot of this is, unfortunately, I think what we could probably say is the days of when you would kind of just hire somebody, define their territory by zip codes or cities or by states, and say, okay, go figure it out. Those days are gone. And what that ultimately produced, unfortunately, was a lot of mediocrity. There was those that stood out and that were the unique individuals in their market, and everybody pointed to them. Well, those are the people that stood out. Those are the ones who are going to have job opportunities, job security, long term. All those folks in the middle that, really, because there was a rising tide or because there was just enough business going through the system and, relationship selling was the only piece that you needed, those folks are going to have a hard time finding new opportunities, or maybe cases, those are the folks that will be on the margin when somebody decides to, reevaluate their distribution efforts and change course. So, I think it's incumbent on us as industry leaders to invest back in our people. I think it's incumbent on the current folks that are in those seats today to continue to reinvest in themselves. And for the folks that are coming up the ranks that are looking to kind of get into this space, they're going to need to think about how they would market themselves and brand themselves and how they're going to approach this differently than the folks just 10 years ago who, probably could get away with 3 lunches or 4 lunches a week and 3 dinners a week and, a lot of social time in between to kind of really drive the day. Mm-hmm. It's a lot more strategic. It's a lot more technical, and, the skills and the resources that you have to draw upon are that much more, they'd be that much more complicated for the successful folks going forward. So I think there is a bit of both of it, on both sides. But, if you look at it optimistically and you want to invest in yourself and invest in people, there's a lot of upside along the way.
Thank you for embellishing that answer. Mm-hmm. And by virtue of your embellishment and thorough explanation, you probably answered a bit of the next question, but I'm going to ask it anyway, just in case something was loaded in your brain that wasn't vetted in the last piece. And that is, looking out 5 years, how do you think our industry changes? And again, acknowledging you just talked about a lot of change that's coming. Was there anything left out of it that you wanted to highlight in this particular answer?
Yeah, I think the one piece that I didn't touch on, which is a underpinning to a lot of this, is with the use of data and information, more so than in the past, because the sources of data that we used in the past was just the trade run, right? Mm-hmm. You'd look at your trade run every morning, you'd see who did business with you. You might have seen people who did business with you today that you talked to yesterday. You gave them phone calls. You thanked them for the business. You built your trade run. You built your territory rotation, whatever you want to call it, based on the business that you could see from the advisors that you did business with.
Yep.
And and listen, with that at your disposal, that's what you should have done. That's the approach you take. Then you would go to some of these various different conferences. So when I started, you talked about my career. I started at Smith Barney, and the joke that we had back then, and I still think about it today, is that was the highest paid internship you could get into this business. Mm-hmm. I was on the brokerage side. I was inside the investment consulting side of Smith Barney and the consulting group. Got to see and interact with some of the more dynamic investment advisors out there in our industry, and what you found was there was only a subset of the asset management salespeople, the wholesalers back then, that would even call on me as the person who had, basically an open line I could talk to, and I usually was getting called by the biggest and the best financial advisors and institutional consultants inside of Smith Barney every day, and still only a few of them would give me a call on a regular basis and get to know what I was seeing and build a relationship with me and my peers that, I always wondered, well, why aren't, there's lots of other of them out there, why aren't they giving me a call as well? Mm-hmm. And it was because there was only a few of them that figured out that, there's not only the advisors that they need to talk to, but those centers of influence they could talk to as well that could tell their story and be a part of their cause without them being there. So that little bit of information, that little differentiator, helped a lot of people a lot of different ways. And I would tell folks who's doing the business, what kind of business they were doing, who has a big institutional mandate that they're working on that they should go talk to. And that was very valuable information. But as you look forward, on where we are today with firms, brokerage firms monetizing their data and selling it to asset management companies like us, with other third-party organizations creating consortiums and the like to be able to kind of use that information to help asset management firms make decisions, and more of that coming online. I think that the approach to who you focus on, when you focus on them, how you focus on them, what do you talk to them about, what is the concerns they have, all of that is going to be a lot more rich and valuable based on information they have, and the guesswork out of who do you talk to and when you should talk to them will be diminished greatly. There'll be a lot more understanding of, okay, this person has should be a high priority for these 4 reasons. Now, as an excellent salesperson, I'm going to use all the art and skill that I have to make sure I'm in front of that person in the right way at the right time. And if you do that well, hopefully you'll get to a point where they think of you first. They start giving you a call and asking your advice as a consigliere, as it were, to help them make decisions. So I think that's a big shift. Data and information is going to make a really big shift on where the most effective people should be spending their time and how they can really understand how are they doing in the marketplace versus to where we were just 5 years ago. I mean, some people will call it, the more it's taking a sales-led process and making it a marketing-led process. And I know those are maybe even inflammatory words in some parts of the industry. I just think it's using information to make better, more informed decisions, to make the people in the field that much more effective and understand if they're being effective or not, and how do they adjust from there. So I think that's a major shift that's already happening and is going to continue to accelerate over the next 5 years.
So through the course of these excellent answers you're providing, you've called out a number of things that would cause any senior executive to wring their hands and furrow their brow in concern. Everything from fee compression to the dollars, as you say, that are being asked to monetize data from firms, et cetera, et cetera. If you had to bring it down to one industry trend that tends to concern you the most, of many I'm sure you're charged with thinking about and developing solutions or answers for, what would it be? What one industry trend would concern you the most at this juncture?
Concern me the most? I think this is on the forefront of things that are happening, but access to the advisors, I think, is the biggest concern. And so let me kind of clarify that a little bit. So
I think everybody listening thinks they know what you mean, but we got to know for sure what you mean. It may be the same, but go ahead, please.
Yeah. So I think the biggest shift that's happened in wealth management, the advisory world, is the idea of using discretion, right? And what I mean by that is when I was at Smith Barney, 90%, if not 95% of the advisors did not take on discretion. Everything was at the client's direction. They had to get the permission of the client to make a decision in their portfolio. Mm-hmm. So in essence, they were helping the clients make informed decisions. 5% was discretion, and remember, Rep as PM started, in the middle '90s, largely as a way to to economically validate or kind of economically benefit the research departments of all the different big brokerage firms. If they had a buy decision on XYZ stock, well, that was a stock that a rep as PM could use in a portfolio that they're going to build. Mm-hmm. And that changed rapidly from being mini portfolio managers building portfolios stock by stock to asset allocators building portfolios with mutual funds and other vehicles that will be a complete solution. When I joined Schwab in 2002, the first thing that was just hit me like a lightning bolt was the fact that 90% of the advisors in the fee-only world took on discretion. Mm-hmm. And so I was like, wait a minute, what's going on here? This is a stark contrast, one for the other. And that shift really was more predicated and driven by the fact that since these independent RIAs were running their own businesses, they needed to put scale into their business any way they could. And since they never were part of the whole brokerage world where you acted in that capacity, they always were in the fiduciary world, taking on discretion was no problem. And if you look since 2002 to today, I mean, the whole discretionary component has grown dramatically and rapidly, and it's still the fastest growing platforms, any advisory platform that's out there. And my contention is it's because it's driving scale into a very hard or unscalable business. When your time is the biggest commodity you work with, when you're working with individual clients, and having to call them all to make a decision on a really time sensitive issue, that caused a lot of friction into how they could service their clients. So now with discretion, they can serve a lot more clients, and they can serve them much better and much more efficiently by having discretion and then giving them regular updates. And so when I think about that, the access to those advisors, if the advisors are now outsourcing that decision-making process to whether it's a home office discretionary asset management team or a third party portfolio builder or asset allocation entity, that then gives us less access to the advisor. There's less people making decisions, and that puts more inherent risk in us, in that one decision has a much more profound impact than it ever had in the past. So having access to the decision makers and having access to the advisors at a more disparate way, that to me is not a concern from an asset management perspective. It's a concern from a wholesaler perspective. And as that trend, and I think it's one of those things where a pendulum will shift again as well. But I think as those things continue to trend towards more and more advisors outsourcing the asset management or the asset whatever the purchasing decisions and the asset allocation decisions to somebody else, that it has an impact on the wholesaler, the ability for them to influence the decision. And so I think that's where I think is the single biggest issue over time. I think it'll swing back over time as well. We get into discretionary or get into a recessionary environment, and the advisors are going to want to take on that decision making on their own again, I think. But I think that's probably one that has the biggest impact on wholesalers, because it could drive how many are actually needed in the industry over time.
It's interesting as I listen to you explain that. And you use the word towards the end. It began as a discussion of access to advisors, which to so many wholesalers would mean, will they take my appointment? And maybe the core of it, and again, you use that word towards the end, is, well, they may take your appointment, but you may not be able to influence their decision, because their decision is preordained by something that they're looking at that is a prepackaged solution, a multiple fund solution, whatever the thing is. I don't get to influence you in a decision unless I'm influencing you to take a particular platform that I'm included on. So it's interesting, right? It's interesting that it's, yes, it is access, but it's also to a greater degree perhaps influence.
And if you think about it, if you equate what a wholesaler does in the retail world, it's part client acquisition, it's part client service, and then it's part kind of relationship management. Mm-hmm. And if you take that client acquisition piece off of the table, well, then the other two pieces typically aren't something that you would have as a really high valued external person that you'd want to do. Now, again, back to my earlier comment, why I'm bearish or why I'm super bullish on wholesaling, I think that client acquisition piece and that ability to build relationships with people that are influenceable and that can really make decisions and really have dynamic issues on their plate that they're looking for help on, I think that makes them very, very valuable. But, if more and more go to that piece where you really only need a client service and maybe a relationship management component, then, that would be a bearish signal against the traditional wholesaler. So I think there's a delineation that I would make between those two, and I still think there's a lot of bullish room, and there's plenty of white space for talented individuals to add a lot of value in the marketplace going forward.
So if access and influence are the things that concern you the most at this present place, what one industry trend keeps you most excited and hopeful?
I think the data piece is probably the most exciting that's out there. And from a person who's asked to make decisions about resource allocation and time allocation and investments in the business and the like. Having the information and the data to be able to make these decisions, not on an anecdotal gut basis, but make them on founded, understood, and financial bases, to me is going to allow us to really do things really creatively and differently going forward. Yeah. I think the idea that with this information it's going to make people the wholesaler less valuable. I think it's the exact opposite. I think it's going to shine a light right on those that are added value and those that are perform. And I think on top of that, it's going to give firms like ours and others the ability to say, okay, wait a minute, where are you skilled and where are you deficient? Let's make sure we're educating and giving you a platform to kind of bring up your deficient areas so you can maximize your skill areas and you can be that much more efficient. That to me really, puts a really big, kind of driver on how you can continue to evolve and be successful in this business.
It really helps you be a different kind of leader, which is so interesting. I like what you said about, it's not your gut. It's a much more well-formed and informed decision that you're making.
Yeah.
Let's go on to the next question. Three things that your today self would tell your newer to the industry self about how to succeed, thrive, and get ahead. What would those three things be?
Well, first and foremost, I would say, take chances. Look for opportunities to really, stretch yourself and don't be afraid to fail. And there's so many different opportunities in the here and now, and you hear about so many different things that are cutting edge ideas that are out there that maybe a flyer, but what you learn by being a part of some of these things is invaluable. And I that first piece, I think about my time at IndexIQ. I was there for 18 months. I joined when there was essentially zero assets under management, and I went in with some preconceived notions of what I thought this was going to be all about, if I were to do it all over again, I would do things 100% differently. That's just one experience. That there are hundreds of experiences that I would say to myself, hey, listen, take the chance, give it a go, stretch yourself, because it's all going to be helpful as you continue to build your perspective, and that's what it really is all about. I think the second thing that I would say is about to tell my older self or my new industry self is really try every way you can to understand the business from multiple different facets. The view from the advisor's perspective, the view from the broker-dealer platform perspective, the view from the asset management perspective, the view from the client perspective. And wherever you can experience all those things or put yourself in a spot where you can get a good understanding of those things is gonna be really, really helpful. And then, the last thing is, be patient. I'm, many people that are in, roles like mine and others, you don't typically get there by letting things happen, but, patience is a virtue, as it were. And I think, anything that you can do to, let things, play themselves out, take the time, when you're looking to do some of these challenging things that are going to stretch you, don't pivot away at the first sign of duress or stress. Take it for what it is and run with it, and really give everything a good chance to play out and have that patience. Those would be the three things that I would, suggest to my young, newer self to think about as in the business going forward.
Those are all awesome. It's interesting too that the one that you speak about, patience, it's difficult, especially as a younger sales professional trying to get where you're going, to be patient, and maybe even more difficult to listen to more senior folks tell you that patience is a virtue.
Yeah, I know.
But for you younger wholesalers, aspiring leaders, it comes in handy. Trust us.
Yeah. I mean, it's one of those things that, I know everybody wants to get ahead, and nobody can get ahead fast enough. But that those experiences and that the ability to try things out in certain parts of your career won't be afforded at another part of your career. So take the opportunity that you have in the early stages to get that perspective, because there's chances sometimes to take on those new initiatives later in your career. For most of my friends that have to go through that, it's not something they tried to do; it's something that was forced upon them. And I would prefer myself to have taken those chances as a younger individual when the stakes weren't as high.
Definitely. All right, the last question for you, sir. Who is or was the greatest influencer in your career, and why?
Yeah, no, this one, I've looked at this one for a little while, quite honestly, Rob, and I'll tell you, I'm going to give you two. I can't give you just one.
Okay.
The first and foremost greatest influencer on my career was my father.
Right.
I mean, he was an extremely hardworking man. He kind of gave me the whole work ethic, the ability, I just saw in him of, get up every day, do your job well. You don't need to think too much what people think about you, but you do need to understand how other people see you as well. And no matter what happens, whatever changes happen, still get up and do your job, each and every day. So that's a lesson that I picked up from my father that I think about all the time, and really has instilled, a lot of the things that I've done and how I've approached, work and various different opportunities. The other biggest influencer on my career is a gentleman I still work with today. Jeff Cusack was my first boss at Smith Barney. I joined Smith Barney. Honestly, I responded to an ad in the newspaper. Nobody who listens to this will ever think that's how you do things or how it was ever done. But I actually responded to an ad in the newspaper, and I joined the company. I joined Smith Barney, and in a great role, like I said, the greatest, the highest paid internship you could get. And I was probably there for 6 months when the light bulb went off, and I realized I didn't have a job anymore. Now, granted, I'm 3.5 years out of college, so it's not like, I should have had this grand, kind of epiphany. But I was 6 months in, and I realized this wasn't a job that I had anymore. This had the potential to be a career, and it had a lot to do with Jeff and his mentorship and his the insight that he gave me. And I remember that the 6 month timeline roughly was bucketed by two different conversations we had. It was probably a month on the job, and he asked me, we went out to lunch, and we were eating someplace in a local San Francisco lunch place, and he just, asked me an innocuous question. He's like, well, what do you want to be when you grow up? What do you want to do long term? And I was in the early stages of taking the CFA, and I thought being a portfolio manager or an analyst or one of those things was pretty cool and, great job to have. And I explained to him that's what I wanted to do. And he, in a very casual way suggested to me, he's like, yeah, that's great. It's fantastic. And, those are great opportunities. He's like, and those are great careers to think about. He goes, just one thing to think about is, even if you're the best, stock picker or, manager in the world, if you don't have somebody raising money for you, you're probably not going to do all that well. Just something to think about is what he said to me. And so 6 months later, we're back together and we're having lunch again. And, he asked me the same innocuous question. And I said, I had thought a lot about it, and I had watched him and watched things going on. And I said, he asked me, he was like, well, what do you want to be when you grow up? And I go, well, I'd like to have your job at some point.
There you go.
That's what I wanted to hear. And he's been a mentor and a nice, a big presence in my life ever since. So those two were individuals, my father and my good friend and mentor, Jeff Cusack.
Those are awesome. Jeff, I can't thank you enough. Clearly thoughtful insights, well constructed, and everyone that's listening benefits from those. So on behalf of all of our listeners, thank you for joining us.
Anytime, Rob. I appreciate it, and I hope it's been helpful. And of course, I'm happy to anybody who wants to grab me at a conference or on the street. I'm happy to help anybody out there who's getting into this business or looking for ways to grow. So thanks for the opportunity.
Most gracious offer. Wholesalers, come back next time for the episode of Lessons from Leaders from the new Wholesaler Masterminds radio show. For more information about Wholesaler Masterminds, visit us at wholesalermasterminds.com. Find the new Wholesaler Masterminds radio show at Apple Podcasts, Stitcher, Google Play, and Spotify.